Second part is about the accounting standards. So first of all, let's focus on the US GAAP, the United States cases. So FSSB, which is the Financial Accounting Standard Board, they basically have statements, is the accounting rules. And the statement number 8 became effective on January 1st, 76. So before this time, the current non-current method is widely used in the United States. Basically, its objective was to measure in dollar an enterprise assets, liability, revenues, or expenses, which are the balance sheet and the income statement accounts that are denominated in foreign currency according to the GAAP, General Accepted Accounting Principle. That's GAAP, that's GAAP, right? That's accounting rules. So these statements essentially the temporal method of translation. So before this time, they usually use what? The current non-current method, but after these statements, like statement number 8, a temporal method is more widely used. But there's some subtitles. So for example, according to the temporal method, revenues and expenses, which are income statement item, are to be measured at the average exchange rate for the period. In practice, however, multinational companies prepare monthly statements, okay? What is done is to accumulate the monthly figures to obtain the total for the year, okay? So they usually just require temporal method, but there's some you know, some changes, not really big changes, but minor changes because of the real, the practical reasons, These statements ran into acceptance problems from the accounting profession and multinational companies from the very beginning. Because the temporal method required taking foreign exchange gain or losses through the income statements. So consequently, reported earnings could indeed fluctuate substantially from year to year, which is irritating to corporate executives. It means that the temporal method basically require the MNC recognizes gain or losses in the income statements, which may change the income, net income, earnings. Not because of the operation, but because of translation. That's why the accounting professional and the multinational companies have complain these problems when they accept this FASB statement number 8. Because we don't want to see the earnings volatility, not just because of this translation. So that may be the issue of the FASB statement number 8. So there's another proposal actually provided to overcome this problem. This is FSSB statement 52. So the objective of this statement is to provide the information that is generally compatible with the expected economic effects of the rate changes on enterprises' cash flow and equity. Okay, and also to reflect in consolidated statements the financial result and relationship of individual consolidated entities as measured in their functional currency in conformity with US GAAP. So the purpose of this statement is basically to try to give the idea how you translate the foreign currency to the US dollars, first of all. And this statement is proposed to overcome the problem of FASB number 8. In February 79, a task force was established with the representative of the board, the International Accounting Standards Committee, and the accounting standard bodies from Canada and the United States. I mean, United Kingdom, sorry, United Kingdom. Meeting hearings occurred, many meetings actually, and it issued in December 1981. So in 1981, December, new statement, which is FASB statement number 52 was announced, issued, and all US multinational companies are required to adopt the statements for fiscal year beginning on or after December 1582. So from the 1982, they used this method. In FASB statement 52, there are two currencies here, two different types of currency. So the currency that the business is conducted in is called a function currency. Function currency. So if you run a company in China, Chinese yuan is function currency, right? So that's the actually kind of foreign currency. That's function currency. The reporting currency is the currency in which the multinational company prepare its consolidated financial statement. So it's actually local currency, not really, the currency in home country. So home country currency. So in the US, it should be US dollars. And there are two-stage process here. So the first step is to determine in which currency the foreign entity keep its book. Okay. And if the local currency in which the foreign entity keeps its book is not the functional currency, the remeasurement into the functional currency is required. And then second, and the foreign entity's functional currency is not the same as parent's currency, which is reporting currency, okay? The foreign entity's books are translated using what? One method? Current rate method. So but based on they use current rate method instead of temporal method. Okay. Now there's concerns about the highly inflationary economies, because if the inflation is too high, then the translation of the currency keep changing, right? So foreign entities are required to remeasure the financial statements using temporal method. So they allow you to use the temporal method because the current method keep changing the interest rate. And if you run a company in very highly inflationary economies, then exchange rate keep changing too much. So they can use the temporal method as if the functional currency were the reporting currency. Okay. So the highly inflation economy is defined as the one that has cumulative inflation of approximately 100% or more over a 3-year period. So 100% for 3 years is really high inflation economy. Why? Because to prevent large importance balance sheet accounts carry the historical values from having insignificant values once translated into the reporting currency at the current rate. Because, so for example, like the inflation is 100% comparing this last year. So we have, say, $1 was, say, 100 Japanese yen. Like Japan, not highly inflation economy, but just supposedly. Just to become 100 equals to 200 yen because of inflation, then N value declines, right? Then you actually have to use this one for the historical value. So you require some land last year. You simply have the value more because, I mean, value less actually, value less because of inflation, right? If you use the current rate. And this value is not right. So this case, just for highly inflationary economy, the GAAP allow you, the company use temporal method, which means that they can record like the land acquired previous year just to use the historical rate last year. So that's the purpose of the these exceptions. So highly inflation economy, there's some exceptions. Now, as you know, US GAAP is quite different to the international GAAP, international accounting standards. There are some differences. So since January 2005, all companies doing business in the European Union, so in continental Europe mostly, must use the accounting standards, so-called International Accounting Standard Board, so IASB. So this is also called International GAAP. Similar to the American Financial Accounting Standard Board, the International Accounting Standard Board published its standards in a series of pronouncements called International Financial Reporting Standards. So this is called IFRS. So IFRS is the international GAAP. So if the company run a business in Europe, not just in Europe actually, in many, many other countries internationally, other than the United States, then you have to use IFRS. It also adopted and maintained the pronouncement of the predecessor body, IASC, International Accounting Standard. So they basically had IAS before, and they changed to IFRS. And everybody who run a business in Europe should follow this IFRS. So in IFRS, long as IAS, so statement 21 says, the translation method should be used by this statement is very close to the monetary and non-monetary translation method. So that may be a little tricky because you run a company in Europe, but mother, like home country is the United States, then you have to use the monetary, non-monetary translation method in Europe, and you have to consolidate to the U.S. parents firm, required to use mostly current rates, right? So in 2009, IASB and the FASB issued the Memorandum of Understanding, MOU, to achieve this substantial convergence of accounting standard by 2011, which means that they want to set kinds of very common rules so that every company in the world follow the same rules. Especially Europe and the United States the relationship is so close. It's very tricky and costly if their rules are quite different. So consequently, most countries may be able to follow the common standard for the foreign currency translation soon. Not yet, but soon. So you have to follow the rules so far that the country requires, either US GAAP or IFRS. And mostly the FASB Statement 52 says you basically have to use the current method, right? Current rate method, right? And which means you use the current rate. For highly inflation economy, you can use the temporal method, but there's some condition. International accounting standards so far require to use the monetary and non-monetary translation method. Eventually, they will converge soon, so we may be able to see the common method in the near future. Okay, so that's the end of the part 2. The part 3 is managing this translation exposure.